Ramesh Swaminathan, who's CFO of Lupin, joins us to talk about Lupin's numbers. Ramesh, good morning. Thanks very much for taking out the time to speak with us over the phone. Can you talk about, firstly, and very simply, why were the results weak? There's been a 12% EBITDA miss due to higher costs.
Firstly, I think the overall results were not as bad as you make it out to be. I think it's in line with what we expected. And we have been on record saying for the last few months that this is not going to be the best of years. So I really don't know where your perspective comes from. From our perspective, the fact that we were able to grow revenues sequentially across all geographies was certainly a silver lining. We were able to do that in North America. We did that in India. We did that in APAC, EMEA, and Latin America itself. So there are very few regions, geographies where things have been lackluster, so to speak. I mean, it's tepid, but having said that, we still are seeing growth. Overall, so we have been, of course, aided by very positive tailwinds from the forex front. And when you speak about costs, the fact of the matter is, there are two things. Firstly, there has been the forex impact on cost itself. So while gross margins went up by about 2.5 percentage points, the flow through to the EBITDA was only about 1.5 percentage because of, in fact, the higher, cost of this coming through the effects itself. So we have huge operations outside the country, and they get translated at a much higher rate.
Morning, Ramesh. Nikunj also joined in. Well, our understanding when we say numbers are good or bad is purely based on what the sum total of brokerages were. But that's a different, that's a different conversation. I'll throw a number at you, which is what we've got from a couple of brokerage reports, which I have in my hand. Are you on course to do about $850 million of sales target in FY19? Because in the first half, if I look at what you've achieved, it's not even $500 million.
That's right. So it's about $350 million. So potentially the second half is something that we believe would be much better than the first half. And I think you're referring to the U.S. We're still on track to do it about the $800 million, we believe, because we have got a few good products lined up. For starters, we have Renexa, and there'll be an exclusivity on that, for some time. The second part is we do expect, Secretazole to kind of ramp up. So that is the second. And third, of course, the flu season, it will click in the third and fourth quarters. And traditionally, that's always, contributed pretty good for us. So for those reasons, we do believe that we are on track for the 800-odd millions that we guided for in America.
The question, what I guess we need to understand from you, and this may not apply in this quarter, next quarter, it is about the cycle and it is about the trajectory. After a massive price erosion for the generic market, do you think the price erosion is over? That's part A of my question, which is very important. And B, do you think the price, elasticity is also coming back?
So both are good questions. When it comes to price erosion, I think, we have seen the bottom of it all. If you look at the top 3 or 4 large companies in America, from Teva to Sandoz and others, they've been shedding their portfolio also, Mylan. So the top companies have been shedding close to about, $1 billion, about $3 billion in all of their portfolio. And to that extent, there are opportunities coming in for other companies. We have been able to take some part of the business, even this quarter, for certain molecules. And I think there'll be more to it in the future. For that reason, we do believe, that things are not as bad as they were, in the past. Things would be looking better. And that's the reason for the optimism.
Solosec, Ramesh, how would you qualify the kind of scale back that you're expecting in market share in Solosec and the returns that you would expect from this drug?
You would appreciate, that it's still early days. So we launched it towards the end of June, and it's, and that's just about a quarter of, full quarter. We're doing about 900 prescriptions per week. It's still on the ramp-up mode. It's early days. What you're spending is about $12-13 million, and this partly answers, your first question is why is your cost base pretty high? So there's no commensurate revenue. The cost is is about $12-13 million that we incur for Solosec at this stage, without any revenue is just about $3 million. And as I said, so we do believe that Solosec will certainly ramp up in the quarters to come.
What about the weak trends, Ramesh, that one has witnessed in Japan and South Africa? Do you think the pressure would come off from those markets anytime soon?
First about South Africa. South Africa is doing good for us. The first quarter is always the weakest. Second quarter it just comes, generally goes up a bit. South Africa still continues to do in local currency terms pretty well. There is growth of 9-10%. It might not translate into rupees, increase because there has been a depreciation of that currency also, as with other emerging markets. Japan is a different story. When we started off several years ago, the penetration rate was just about 17-18%. So there was tremendous growth possible out there. Today, the penetration for generics has reached, it's peaking at around 74-75% and potentially could go up to 80%. So there is slower growth coming up. There's still some volume growth picking up, but we are also impacted by tremendous price cuts. This year, for example, we did go through the every 2-year price cut. Potentially that could change with going into an annual price cut. So there are some headwinds when it comes to Japan. The other part is the government, which used to incentivize promotion of generics, both to the trade as well as to the doctors, has called off, in fact, these incentives. So to the extent it is going to be turbulence in Japan, and that's reflected in the numbers.
Okay. Ramesh, so I don't want to get this one wrong, and I'm going to take the clock back. When we spoke to you about a year ago, your choice for words was challenges in the US generic market, demand seems to be an issue, and price erosion is the new norm. If I choose the words from your current from our current interaction, you are guiding for a better future. You are indicating that price erosion is back, but yet you are not speaking when real demand will come back. So that is the only missing link, Ramesh. I like what you're saying in terms of shareholder communication, but shareholders would be very happy when you can really indicate that when the real market will start opening up in terms of a demand scenario. So the communication is much brighter, much better than what you told us a year ago. So that's good news. But for me, the complete good news is only when you indicate on demand.
That is something which is actually really dependent on the pipeline itself. So we have some products which are lined up for the immediate future, Renex, levothyroxine, and so on. But going into next year, we are looking at ProAir for starters. Lurasidone could also be a limited competition for some time. So there are some products, but I think the real moolah would click in when we're looking at, in fact, unleashing products from the inhalations portfolio, from the Etanercept and from the biosimilars portfolio, and perhaps over time the injectables portfolio itself. I think revenues and buoyancy is really a function of the kind of products that we bring to market. The fact of the matter is, whilst I say that the price erosion has been contained, which is true, the fact is, it really depends on individuals' pipelines as well. And on the commoditized front, there is tremendous competition. There are far more players today. There's far more, there's of course a lot more expedited approvals coming in because of application of GDUFA. But the competition is obviously lower when it comes to, in fact, products which are complex. And to me, complex means products that require clinical trials. The inhalations portfolio, some of these complex injectables, biosimilars, are those that we should be concentrating on, not actually bring in the kind of revenues that you're speaking about, and of course the realizations, the yields that are possible on those.
All right, Ramesh, appreciate your time. Wish you and your family a very happy Diwali, and always great to interact with you.
Thank you very much. Pleasure to you, and wish you the same as well.